As you can see, it's difficult traffic out there, so hopefully we'll have a fourth panelist joining us here momentarily. But I don't think there's a more timely topic than the interplay between crypto and macro. Clearly, we're coming off of a week where we're seeing elevated currency and fixed income volatility, VIX reaching recent highs. We've got the dollar appreciating versus the basket currencies, again, multi-decade highs, the pound depreciating. We have the BOJ intervening to strengthen the yen. So clearly there's a lot going on in the macro world. And of course, we're all here focused on crypto. So really the discussion today, we want to talk a little bit about the interplay between the two. I'm joined with a very talented group of speakers. So I'll give them just a moment to introduce themselves. Darius, you want to start?
Sure, thank you. My name is Darius. I'm the founder of QCP Capital. We are a full suite crypto trading desk. So we do anything from spot, rates, options. We also do quite a bit of venture and PE investments.
I'll continue. I'll give you a second to catch your breath. I'm Jody Alexander. I'm the Chief Investment Officer of Selena Capital. We're a trading firm. We do market making, and we also do venture as well.
Cool. Hey, everyone. Good morning. Sorry for a bit of a delay. So I am Zahir Ebtekar. I'm a portfolio manager at Ledger Prime. I primarily focus on liquid and discretionary trading, and I also focus on venture a bit as well. And generally speaking, Ledger Prime does as a quantitative investment firm, so we also do market making, and then we also do OTC options, similar to Darius from QCP.
Awesome. So in 2017, when I first started running capital for outside investors, I was pitching a lot of institutions. I was pitching them on what I thought was the value proposition for then largely Bitcoin. Clearly, the universe has expanded a lot. And we talked a lot about other things of censorship and inflation and a lot of things that clearly, at least from a US-centric point of view, weren't at the forefront. And then now we fast forward 5-6 years and we have single double-digit inflation across several countries. We've seen financial censorship in both developed and emerging markets, most recently Tornado Cash. There's Canadian truckers protesting COVID and being censored. So there's a lot of different things that you would think would be driving kind of a positive tailwind for crypto. And I think what's on the mind of a lot of people is why is crypto price maybe not reflective of that despite the bigger backdrop. So maybe Jordy, if you've had some thoughts on kind of what's driving crypto prices now as it relates to what otherwise seems like a pretty strong macro narrative.
Yeah, absolutely. I mean, everything has been trading with a correlation of 1 across risk assets, whether it's equities, whether it's cryptos, all of them. And it is, a lot of us in crypto try to bunch everything together, but there are different use cases. And I think one of the things that's changed since the last cycle is the use of stablecoins to start to take advantage of, being able to transfer money abroad, being able to have access to something apart from the local currency. So people will just expand the Eurodollar system by buying USDC, buying USDT, and that's a way for somebody like in a developing country to get access to an inflation hedge. So instead of them using Bitcoin or Ethereum or something else, they're using stablecoins. So the narrative has to kind of shift, and we have to determine what exactly are the different use cases that we're looking at. Obviously, right now with the currency crises across the world, where the dollar, I don't know how many of you believe the dollar milkshake theory or are familiar with it. Obviously, that theory is potentially playing out where there seems to be a lack of dollars across the world right now. And potentially, stablecoins are taking a little bit of a fire. And instead of people trading Bitcoin, they're trading the other part of the pair. So it's Bitcoin/USDC. So when you say, why is the price going down? Partly because USD is becoming more popular.
Yeah, and we'll talk a bit more about some of the drivers of decoupling as we get into the panel. I guess from a flow perspective, I know you guys both do some market making. In terms of your own shops or allocators that you work with, the counterparties you work with, what are you guys seeing from a flow perspective, and how are people in the market positioning themselves, again, with this broader macro backdrop?
Should I start? You start?
You can go.
Maybe from a bigger picture perspective, if you look at all assets this year to date, everything is down except US dollars, natural gas, and some pockets of real estate.
Maybe the ruble.
Sorry?
Maybe the ruble.
Yeah.
So actually, if you look at it, there has been no clear inflation hedge. Everything is down. Not fair to say that Bitcoin is a. I mean, it was meant to be an inflation hedge, but this is an environment where, because of high inflation, there is policy uncertainty, and every asset is reacting to that, right? Reacting to the potential drain of liquidity. So the strange situation is that actually, even though the market is pricing in a big drain of liquidity, there is a lot of dollar liquidity still. So especially in crypto, because a lot of the crypto assets like Bitcoin, Ether, were sold down into dollars, and you have a situation where crypto lending deposit rates are lower than treasury yields, right? So you have a situation where the market is pricing in a lot of policy uncertainty, everything is being slowed down, and Bitcoin, Ether, crypto is not spared in this respect. And then at the same time, you have a lot of liquidity. So what we are seeing on the flow side is, while the VIX is pricing in highs, I think last night it hit 34, crypto vols have actually been coming down, right? So pricing in sideways or pricing the liquidity flush. So we have a bit of dislocations in the market. Could be opportunities there, but I think interesting to see how it goes.
Yeah, I was going to comment also on skew in general. So short-dated skew. So this is basically the delta between a call and a put. For us options guys, it's been relatively high historically for ETH and Bitcoin this summer. And that also shows a lot of positioning in my opinion. And then also funding rates generally for kind of more exotic products have been a little bit more expensive. But I think I wanted to touch on what Darius mentioned, which was even the most safe vanilla investment, which is US government bonds, have been down 20-something% this year. So this is one of the first times in history you see both equities, which are deemed risk assets, and then also very safe government bonds trading well in negative throughout the year. So it's really hard for any asset class, let alone crypto, which is deemed like maybe furthest out on the risk curve, to catch any sort of bid in this kind of chaotic market. And then there's also the fact that I think markets are always forward-looking. It's not random that when inflation became a very mainstream topic of conversation, that Bitcoin and Ether prices peaked. But it was the expectation that inflation would happen that people went for these risk assets. And this is the same thing for Amazon or Twilio or whatever other public equities exist out there.
Right. Yeah, so that concept that assets are forward-looking, which I totally buy into. Markets being efficient, I'm not sure that I buy into, but that's clearly a leading thesis. I think one thing you hear a lot is that crypto is the last efficient market, and I think what people mean by that is that it's not as subject to manipulation, at least in a structural way, as a lot of traditional markets. And again, that's also debatable itself, but the fact that it trades on regulated and unregulated exchanges, it's generally accessible to everyone. That's actually structurally very different than equity markets, definitely different than the treasury market. And so do you see any evidence of crypto actually leading a potential policy change? Like right now we're on the back of Fed funds rates, I think expected to be 4.5 by the end of the year, 4.7 in the beginning of next year, dollar appreciation, this risk of breaking things. Is there any, and in the last week, we've actually seen a bit of decoupling between crypto and traditional markets. You mentioned the VIX, you mentioned, again, relative strength versus NDX, all that's been quite strong. I'm wondering, is that the crypto expressing, hey, like the Fed's gonna have to pull back, or there's gonna be some other kind of policy shifts, or is that more just a short-term anomaly that I'm buying into too much and being hopeful about?
No, I think that's a good question, right? And there's no easy answer to that one. But when so there are two parts to this. So when Russia invaded Ukraine, right? What we saw was an increased interest in. So if you look at all the DeFi participation, we saw increased interest from the Russians and the Chinese for obvious reasons, right? That crypto is still the only non-sovereign capital market. But at the same time, so to answer your question, there is this potential that as a non-sovereign capital market, it benefits in a multipolar world. It benefits in a world that where U.S. economic hegemony is being decayed. But at the same time, it is increasingly becoming a more speculative asset for both institutionals and retail. And for that reason, it gets very sensitive to policy changes as well. So you have these two forces that are playing at each other. Remains to be seen which wins out in the end. But correlations have been high. I think the decoupling has only been like 2 days, so I don't think it's that significant. I expect correlations to remain high, and increasingly so because at least for the next year, because crypto has become one of the macro risk assets. Maybe a higher beta, sometimes lower beta, depending on which. But I expect it to increasingly become a macro risk asset. So we haven't seen the we saw signs of this decoupling in terms of the interest, but we haven't seen evidence of that yet in the price.
Yeah, I think if you look back at March 2020, so this is the period when we had the COVID crash, when no amount of monetary policy at the time could really reverse course for equity markets. But there's an interesting kind of lag between crypto markets and equity markets at the time. So crypto actually bottomed about 10 or 15 days before equity markets bottomed. And you could make a similar argument that maybe it's not 10 or 15 days this time, but maybe a couple of months. Mostly because crypto doesn't have any backstopping capability. Now there's some exchanges that are willing to backstop a lot of the carnage that exists, but especially back in March 2020, there was no backstopping mechanism. When you liquidate on market, and you market sell the order. So there's no means for there to be a perfect match, and there's no delay in terms of margin call. So that leads to a lot of carnage very quickly. And this is why you've seen crypto seem somewhat resilient in the face of equity market carnage, mostly because we've already had our period of time. We've already had our most of our liquidations went through in maybe a month and a half, 2 months. You don't remove $40 billion worth of excess without hurting the broader market, but there's not pockets of $40 billion of vulnerabilities within crypto every single day, right? So you don't have Luna implosions every other day in crypto. I hope so, at least.
Yeah, I mean, coming from traditional markets, which are so much bigger than crypto, I never imagined that crypto would be like a leading indicator. But what I've seen over the last few years, because of crypto being such a pure liquidity asset, it does lead both on the way up and on the way down. And I think it will bounce back first. It's also crashed first. We don't know exactly how long the difference between crypto and equity markets is. I think it's expanding. I think crypto is a lot closer to bottoming right now than equity markets, partly because of the deleveraging that's already happened. And I think crypto is really the source of, it's like liquidity sink. As money will re-enter the system, a lot of it will look for where is the most return going to come from. People look at risk return, and they'll say, here's all the asset classes. If I'm actually optimistic, if I think the markets are going to be doing well for the next few years, where do I allocate? And crypto has a very strong kind of potential for, at this point, having already had a very strong bull market, I think people will look at the risk reward in a good liquidity environment as being very strong for crypto.
Yeah. So it's interesting you say that because so clearly I view crypto as being kind of out the risk curve, but I also hate kind of like compartmentalizing it as this like the most speculative asset, which I feel kind of demeans some of the long-term utility. And clearly we're on this, evolution of maturation, right? Like there's a lot of promise, but we're still kind of developing all the use cases and primitives. Where do you think we are in that timeline? What do you think needs to happen to see decoupling? I mean, part of it, we're saying maybe we already are decoupling a little bit, and that's more of a liquidity discussion. From a like utility and adoption discussion, what do we need to see, to have a broader decoupling? And maybe we can break this into Bitcoin as its own, asset, and then the rest of the space, which clearly is also an oversimplification. But I think the narratives driving them are different.
Yeah, I'm not sure about decoupling per se, but just from our end, from the trading side, what we've seen is that, so I used to be an FX options trader, right? And we've seen the same guys who were trading FX options, a lot of them are now trading crypto. I think Azahir will agree with me. So I'm not sure about decoupling, but I think it's been we're moving into an era where Bitcoin specifically, and maybe Ether and maybe some of the bigger layer ones are starting to be seen as legitimate macro markets. It's no longer a frontier or emerging thing, right? I mean, just to give you an example, I think last month in August, I think at least a third of the Ether option trading volume came from a single hedge fund, right? And these are big established hedge funds coming into the space. So we're starting to see that kind of liquidity point, starting to see that kind of interest point. Whether it decouples or not sure, but we will definitely see better infrastructure and the way it's going to be traded in a more sophisticated manner, right? You're going to have, right now you have, I mean, the credit markets have exploded. That's going to take some time to rebuild, but the vol markets are becoming more sophisticated. The curves are getting interesting and a lot more better priced. So I think we see this institutionalization happening. Not sure whether it becomes decoupling, but it becomes an institutional asset, and then the whole crypto space sort of trades around that, so to speak.
Yeah, I think the number one driver of any both innovation and also capital introduction will be regulation. And not regulation in the sense that we need to go ahead and ban crypto assets, but rather people are unsure of what they're unsure about today, which is a huge problem for any sort of institutional investor, but also for any mainstream pockets of capital. If the only headlines that we see for crypto are Luna implosion and a certain hedge fund defrauding investors, then that's a humongous problem. So we need to change that narrative for one, number one, and then number two, it's also working with regulators very, very closely. And I hope the MAS in the room can, hopefully work towards that goal of, having a very robust, very clear regulatory framework. And I think that was, what will get us to the maturation of the asset class. Because today it's still very much, high net worth retail that has been around for a number of years, and you're seeing the trickling in of the institutional asset class, as Darius mentioned, but you're not getting BlackRock buying Bitcoin on the open market, right? And hopefully that future ends up happening.
Actually, on this point, I think that we've had a credit crisis in crypto, right? So my thought is that for the credit market to be built up in a proper manner, not the way that we had it before. I'm thinking, I'm not sure whether you guys agree, and happy to hear your views on this, but I'm thinking that the banks actually need to be involved. So to Zahir's point on regulations, right? The banks need to be involved. We need to have a proper overnight rate, a proper interest rate curve for the credit market to begin again. Because what we had before was poor foundations on the credit market, and then guys being able to borrow $10 billion without any credit rating, and then that imploded. And then you have a huge deleveraging in the space, and right now, the credit market is broken. So I'm not sure what you guys think about, how do we rebuild this credit market? And to Zahir's point, whether we need the banks to be involved, whether we need the insti guys to be involved.
I can answer that. I do have quite a different balance of importance. I think getting the credit back into crypto is not necessarily the key thing right now, because credit is very good when you need to expand the supply. Of course, like the Moon Boys want credit, so we can 10x leverage and create these big bubbles. But I think in terms of what's important is the narrative, the crypto narrative. So what we've had is a lot of questions around, what is the benefit of DeFi? What is the benefit of this technology? And everybody here is obviously interested in this technology. That's why we're at these conferences. But we have to kind of think about the broader adoption in the broader world. People on the street, they're not necessarily seeing what we're seeing, and they have to kind of be brought in, either without realizing it. So there can be a lifestyle app or an FIFA, World Cup thing, and they don't realize they're actually interacting with an NFT or crypto. They're just kind of doing it for fun. So that's something that potentially can bring a lot of people in. But I think what's really important is not just using this market for building. They say bear markets are for building. Cool. We have a lot of developers now. There's a lot of hacker houses. There's a lot of people building. We have 800 DEXs. We have 50 centralized exchanges. We have all this stuff that people are building. How about bear market is for philosophy? Let's come up with what are we actually using this technology for? Where does it fit in? And let's kind of collectively use the mind space for coming up with that. And we see even the really, I'll call out even one of the best funds in the space, Paradigm. These guys are very well regarded, and I regard them very highly as well. But even they will kind of use cop-outs crypto is a great alternative currency. it's such a broad thing. Like, what does crypto mean? Do you mean Luna Classic? Like, what exactly is currency that you're talking about? Because most of these things are speculative assets, and nobody's really doing the hard work of, okay, we have 800 cryptos. Which ones are fitting different use cases? We can just say that it's great alternative currency, but somebody has to kind of give a clear picture, especially to the outside world. Because we talk about gaming, gamers, right now, if you look at the reaction to Web3 type of games, it's very negative from the Web2 side. Maybe it's just resistance, maybe it'll change, but I think the narrative has to kind of shape and form the reality of the broader world.
Yeah. No, so we touched on a lot of topics across those those three answers. I do think, at least to date, there's a lot of crypto is like a solution looking for a problem, at least in some respects. If you're in the weeds because you're just building a bunch of different DEXs, a bunch of different lending protocols, which I think are useful primitives that will get adoption in the future, but it seems to be kind of part of what it is. But another thing we touched on, so there's kind of banking buy-in, and I think that's important from just not having a combative relationship with regulators and with the state, and so that's helpful for adoption. I think what you mentioned, having use cases that I think frankly aren't DeFi or aren't alternative money are a good track for getting adoption. So I don't think there's going to be a congressional testimony around in-game assets and NFTs, or at least I don't expect that, not to the same degree that we see with dollar-backed stablecoins. And so that's kind of a Trojan horse for adoption in the future. So yeah, a lot of different spectrum of use cases there. I think maybe one thing we should touch on a little bit, because you talked about seniorage and what is money. I think one use case that we kind of all take for granted, but is now becoming more relevant again is stablecoins in general. Again, it seems kind of boring if you're in crypto because we've been talking about it forever. We've talked about Tether forever. USDC is not particularly sexy. UST might have been until it imploded.
Too sexy.
Yeah, too sexy. But the reality is there's call it 150 billion-ish in dollar-backed stablecoins. In this current environment, this is the first time we're going to go into an era where you potentially have a currency crisis and you have access to dollars outside of your banking system, which is a huge deal. And again, I don't think gets as much press or notice.
Well, I think it's an extremely important topic, right? The stablecoin layer is almost like the pseudo banking layer in crypto. You get a fiat in, and then it's where the liquidity sort of collects, and it creates stability in the space as well. So it's a boring topic until it depegs, and then it becomes less boring. Yeah. So I think I used to have this quarterly call with the Fed, right? And my pitch to them, I can't tell you what they say to me, but I can tell you what I say to them. My pitch to them is always that, and to a point that we discussed earlier, that USDT is actually very important for stability in the space. So they should not be targeting them. You should be working with them to sort of build the stability. And more importantly, it actually increases dollar dominance, and it serves their purpose as well. I mean, they're afraid of the depegging that creates instability. But insofar as they're able to mitigate that risk, all the stablecoins are very, very important in this respect in creating liquidity in the whole space, right? So yeah, I mean, like you said, a bit of a boring topic, but it's good that it's boring, when there's nothing to talk about and everything is stable.
Right. I think we should go on that thread a little bit more because, again, it seems like the U.S. and regulators are relatively antagonistic to stablecoins. On the flip side, right, the U.S. has benefited from the petrodollar for, I guess 40s, 50s, onward. And there's a backlash against that, right? You have oil being denominated in renminbi and bilateral contracts between Russia and Saudi Arabia on this explicit point to get away from the dollar and being explicitly being able to avoid sanctions. On the other hand, the most common stablecoin again is dollar-backed, and if you're in countries that are dealing with hyperinflation, I think the first step we've seen is not go to Bitcoin immediately. It's like, how do I get dollars? And now there's a route for that. So from my perspective, it's actually like the government should be proponing U.S. dollar stablecoins. Again, not that.
No, I always had this theory that that in the life of Tether, like maybe in 2018-19 when Tether was a bit unstable, I always had this theory that the Fed was actually bidding Tether.
Yeah,
it makes sense, right? I mean, if it destabilizes and like China and Asia use a lot of Tether. So I always had this theory that they were the ones stabilizing it, but it was never confirmed.
Right.
Yeah, I think going back to the topic of what's considered sexy in crypto, I think as you get along the curve of people who've had experience in crypto, stable coins are like a favorite topic of everyone, just because of how amazing they are truly as an innovation for the world as a whole. I mean, the ability for me to send $100,000 without having to do infinite KYC is such a blessing. If I try to do that with the bank, it's like 4 or 5 days of paperwork, verification, in-person meetings, things like that. And then they question you about your own money. So stablecoins really solve that problem. And I mentioned this on a podcast with Mark Yusko too. It's just stablecoins are the best thing for the US government.
Yeah.
So they should definitely be a huge proponent of this. But I think, what does that expansion of stablecoins look like, and what does that mean for our market today? If you look at the total crypto market cap, today, we're at a little bit over $1 trillion, or maybe a little bit under $1 trillion actually. Stablecoins make up 15 to 16% of our entire market cap. This is a substantial difference than even at peak in 2020 when it was around 4% when crypto prices were depressed. So you're getting more and more liquidity into this market, and you're getting more liquidity both in terms of people being able to transact in dollars, but also people having access to dollars. So now exchanges are becoming this amazing place for people that live in non-American countries to get access to fiat cash and protect against 20 to 30% currency swings, which is a humongous blessing for anyone. There's been a lot of conversation about this on Twitter as well, where the average retail trader can now, if they have their money in the Korean won, it's down 20% on the year. You have cash now because you have a USDC market. That is an amazing, amazing innovation. And I think it doesn't get enough love. And that expansion is probably one of the best ways for crypto to grow.
Yeah. I mean, I think to touch to the broader point about the dollar, obviously stablecoins is good for the US dollar. And we're in a very interesting situation right now in the macro history where the US dollar is potentially going to start having a lot of pushback from other countries, which we're kind of seeing signs of that, of course, initially from China and then Russia, who are just kind of saying, we don't necessarily want a country to just be able to print as much of the reserve currency that everybody then has to go and beg them for. And a lot of the global powers are going to potentially start getting into the digital realm, like we've seen potentially with CBDCs, where they start deciding that there's a battleground on digital fiat, and they want to fight the US on that battleground. It's going to be easier for them to fight on this new battleground, the digital battleground, rather than the traditional fiat battleground. And I think the next few years, we'll see things that are very different from the last, post-Bretton Woods years. The dollar is potentially going to have a lot of sentiment against it from other countries. For example, right now, they just gave away like $10,000 in the US to anybody who has a student loan. Meanwhile, Europe, the euro is getting devalued. If you follow the dots, what's happening is pensioners who are trying to save euros for their retirement are paying for Johnny to get a humanities degree, at some crappy college in the US. And that, Spanish population will eventually catch on, for example, and say we don't necessarily want to be funding dollar strength and just kind of letting them print that money. And I think the battleground will happen on the digital side, and with CBDCs potentially playing a large role, and hopefully also a kind of more libertarian asset that is more retail. So I hope Bitcoin potentially can play that role. People in Bitcoin world are waiting for the institutions. When are the institutions going to put it on their balance sheet? Actually, I think let the institutions play their CBDC game, and let's just have kind of a global community of retail users have an alternative to that.
So there's, again, a lot of things to unpack. So there's a lot of innovation going around stablecoins, which I think is, a huge, and this is everything from what I would say is vanilla and kind of boring like USDC and fully backed, and then you have the spectrum of, again, UST, which was not backed at all, but highly liquid and at least not censorable, and then you have the spectrum in between. So you have fracks and cello dollars and the entire spectrum. So I think that's kind of one driver of adoption and innovation. And then you made some interesting points on who's going to push back. So who's going to push back on the dollar and the dollar dominance? So I kind of view crypto as like a release valve for global markets, and it's something that people opt into because it aligns with their incentives. And so I'm curious on this like idea that I think governments will push back on dollar stablecoins, but at the end of the day, since they're going on rails that are permissionless, it's really up to whoever, like the people are going to choose what currency they want to hold. So is that first dollars, and then people become skeptical of the US government and say, hey, we want to move to something like Bitcoin, or like how do we see that play out? And then let's use that as kind of our jumping point to like what's our kind of outlook over the next 6-12 months as it relates to crypto and Bitcoin.
Maybe touching your point on the usage of dollars, right? I mean, there's always a lot of talks about this CBDCs and local currency stable coins and the proliferation of that in terms of remittance and stuff. But actually, practically speaking, and in the last 5 years, whenever we've done, because we're in Southeast Asia, so we facilitate a lot of crypto-based movements cross-border. The irony is that the main usage is the US dollar stablecoin, so USDC, BUSD, PAX, and USDT. Because how it works in terms of cross-border movements is there's domestic transfer. So let's say if somebody wants to send money from Indonesia to China, right? Typically, you go to the money changer and you switch your IDR to CNY and you do a remittance. And the way that the US dollar helps that, USDC or stablecoins help that is they do a domestic transfer from IDR to US dollar, and then they move the US dollar digitally, which takes five minutes max and no cost, and then they change it to CNY there. So what happens is actually reducing the need for the digitalization of dollars actually reduces the need for any local currency stablecoin, because essentially locally most currency is already digital. So like in Singapore, you have fast transfer, it's easy, right? So actually this the digitization of currency actually increases the use case for US dollars. So I think that practically speaking, it actually reduces all the need for CBDCs. CBDCs become only for settlement for local settlements and local securities and such. But the cross-border becomes very, very dollar-based, which is what we are seeing now. Yeah. So I think as to your point, as whether how the US dollar stablecoins play in this respect, a lot of it has become more dollar-based than anything.
Yeah.
Yeah. Yeah. $150 billion is no trivial sum of cash. Even for the largest money markets in the world. So I think whatever window of opportunity regulators might have had to clamp down on it, now it becomes a humongous collateral damage impact. So it's like you can't remove that liquidity or say, hey, we're going to remove USDT from circulation, because now there's hundreds of thousands, millions of users who depend on that USDT. So now it's much more of a game of collaboration, in my opinion. I think in terms of, can this eventually, does this hurt the Bitcoin narrative or does this hurt the ETH narrative? I don't think so. I think it's just a duration thing. So right now, one of the major reasons why stablecoin proliferation happened in the last 2 years is mostly because of the yield that could exist both on-chain and also through centralized lending. So you could get, almost double-digit lending rates by giving out your USDC or USDT, both to centralized exchanges and then also to DeFi protocols. So obviously this is a very attractive overall yield for people to go after. But the interesting thing has been, since yields have compressed, and now there's also been a convergence of yields between very vanilla US government bonds and also the compression of DeFi yields, and also the added smart contract risk that exists. Even amidst all of this, difficulty, stablecoin supply has only, dropped maybe 10 to 15%. Yeah. So it shows us more and more that both this cash is here to stay in the long run, hopefully, and then also that, this cash is not just here for yield, but also theoretically here to have dry powder to buy crypto or to, basically facilitate transactions or to, or for people to just currency hedge. So there's more than just one reason, one basket for why these stable coins exist and why there's so much value behind them. And I think in the long run, this ends up coming back into, that release valve of global liquidity, which is, it goes into ETH, it goes into Bitcoin, it goes into Solana, because that is where, these dollars have the highest velocity.
I mean, I think one thing that's underplayed is the power of community around a certain asset. We've seen that in crypto many times, like with Luna, with other assets, where like the community will just kind of decide to store a lot of like their work in a certain asset. And like in Southeast Asia, as you know, India, other places as well, historically, like for many years, gold has been used for that. Like people just pass on gold chains to like the next generation, or they give them at weddings, and that's kind of like been used for a long time. I think, a lot of people thought gold was going to do very well right now compared to the US dollar. They thought that, this was the perfect environment for gold. And you see a lot of the macro people trying to figure out, like, why is gold basically flat? It's being a stable coin. It's another stable coin. It's the gold stable coin. And they try to come up with ideas, and they say, like, well, maybe because, central banks they're keeping it down or whatever. I think the reality is gold is becoming outdated, and that's what the older generation that maybe was very attached to gold hasn't really given up yet. Yeah. All the new people and the millennials who are starting to, get some of the wealth as it's kind of passed on are not necessarily going to want gold. They're going to want something digital that fits in with their lifestyle, because people are not walking up and doing trade with coins anymore. Everything's happening online. And just having a vault in Fort Knox, even if you make a coin that's like we've seen some people try to make gold-backed, Paxos or something like that. That hasn't taken off, because ultimately, like, who wants their gold stored by a third government somewhere where, you don't actually have custody? And if you do have custody, you have to go around giving people coins. Nobody wants that. So I think gold is going to slowly kind of dwindle down. Something needs to take its place, because communities do want to have some asset that they can, give to their children and kind of keep their value in.
Yeah. I mean, what I'm hearing is like it's the accessibility, right? That's kind of the differentiator, right? And the fact that you have control over it, right? Like yields in DeFi could approach yields of treasuries, but again, the accessibility of that is very different. Again, you can have a gold-backed stablecoin, but at the end of the day, gold is still sitting in some vault that's controlled by some bank, and I don't have control over that. And again, so like people will naturally opt into that system that aligns with their own incentives that they have full control over, and that'll drive adoption. So I think we have probably 2 or 3 minutes left. Maybe everyone cares about forecasts and outlook. What's our kind of end of year and into next year forecast? Briefly, it doesn't have to be price, but just kind of what's where we're at, where we're going.
Maybe I'll start. So there's some seasonality for year-end rally, and there is a lot of cash on the sideline. So I'm gonna stick my head out there and say, be a bit positive on this one. Yeah. But at the same time, I think the space is lacking a narrative. So we had the crash, and then we had the ETH merge narrative. Everyone got really excited, and ETH price went up. The problem with vol traders right now is we don't see any narrative for the next year until the Bitcoin halving in 24, right? So we're sort of looking for a narrative. I'm going to be positive on this seasonality year end, but I think by and large the next year might be a bit flattish kind of trading, right, with some upside, moderate upside.
All right. I think Zahir, you said the right tail is most underpriced versus the left tail. What do you?
Right. Yeah. I mean. So I think the overall take for me has been that the right tails are mispriced compared to the left tails. So whenever you have a perpetual stream of just negative news, let's just say for the last 9 months, it's really hard to constantly one-up that negative stream, right? So it's like you had Russian invasion, you have like energy crisis, you have Europe getting really cold during the winter, and then you also have bad CPI prints, you have sticky core, you have and so on and so forth, and to some point it just stops becoming that. So I think as the markets are constantly getting into both like global markets in terms of positioning for shorts overall, and then also in crypto you have like record high skews over 3 to 6 months. For tenors, I think it's hard to imagine that there's going to be this perpetual stream of negative news and a constant stream of deterioration. So the right tails are definitely mispriced in my opinion. I think maybe Jordy could agree on this too, as not the bull on the stage. But even between crypto and TradFi, I think we have a much more compelling case to imagine why crypto has probably bottomed and why traditional markets may be uncertain. And a lot of this has to do with how much front loading of that carnage that we've had that we spoke about a little bit earlier. So going into year end, I'm fairly optimistic. I think positioning should also still be cautious, generally speaking. But I think you're getting to the tail end of this really peak bearishness and peak hawkishness. And I think I'm generally a believer of when the masses are very focused on one concept, say inflation or interest rates or Federal Reserve, this has probably been the highest saturation of these words globally ever. Right? 5 years ago, nobody cared about watching an FOMC meeting, right? And now it's like, we watch it like we go to a pub and you're going to watch Jerome Powell speak. So I think when you get to that extent of extremity, then it's hard to misplace the left tails.
I'm going to be concerned if we have a bullish consensus here.
No.
All right.
So Jordy's on stage.
I mean, I'm going to
Jordy,
be a
any
bit
final
cliche.
comments, Jordy?
Huh?
Was it any final comments, Jordy?
Yeah, I mean, I'll end it with a cliche. Short-term cautious, long-term very bullish, certain things. I'll just quickly explain. Short-term, I think, on the Fed, they will keep pushing until they break stuff. We're very close to stuff breaking. I can kind of sense it, like stuff is going to break very soon. We're seeing it with the volatility in currencies and treasuries. So I'm not necessarily like extremely bullish right now. I think like the next few months, we'll see some crazy stuff, crazy headlines like we've seen recently with the pound. So I'm very cautious. Longer term, I think the thing that makes me extremely bullish for things like Bitcoin and ETH, for example, where you have a limited supply, you have kind of a generation that is more and more interested in these assets, they're going to be very scarce. And what people are not looking at, I agree, is the right tail, but in the sense of in elasticity, where nobody will want to sell their ETH and their Bitcoin in certain situations. And if somebody's going to want to buy a Bitcoin in 5 years, there may not be many of them left that are willing to sell. And that means we could get explosive prices. Right. So I am very long-term bullish despite the current macro environment.
Yeah, a low free float cuts both ways. So we've seen the downside over the last 9 months. Hopefully the next 12 to 24, we see the other side of that. All right. Well, thank you.
Thank you.
Good.